Traders at Access Bank anticipate continued pockets of demand on the long end of the T-bills curve in the near term. For the bond side, there were minimal trades due to the wide bid-ask spread. Uzor Anakebe, a Treasury Team Member at Access Bank, joins me now for more on this story. Thank you so much for your time today, Uzor. Let's get a run through of how the market has been so far this week.
Thank you for having me. So on the money market space, we saw a decline in the market liquidity by 305 billion on the Wednesday levels to close opening yesterday's trading session at a ripple of 427 billion naira. And this could be attributed to the bond auction settlement that happened earlier in the week. So however, we saw the OPR and overnight rates trend downwards to close this trading session yesterday at 29 and 30% handles. Looking at the FX market, we saw the NAFEX rate appreciate by 40 naira to close yesterday's trading session at 1501.02 naira to the dollar, while we continue to see demand outweigh supply in the FX market. It may be interesting to know that CBN has intervened 4 times in the market this week, and we've continued to see the rate trend around 15 handles, 1400 to 1560 handles. However, yesterday we saw a decline in the rate to close at 1533 naira to the dollar in the official exchange market yesterday. We expect rates to continue to trend downwards if CBN sustains this intervention in the market. On the T-bill space, we have seen pockets of demand, like you already mentioned, at the long end of the curve. We saw a lot of demands on the March and April bills, where these offers were lifted around 20.4% handles. However, the May 8, 2025 maturity, we saw it trading around 20% handle as a result of the fact that these papers are quite scarce in the market. We expect this sentiment to continue in the near term as most local investors, HNIs, and asset managers continue to scout for these papers. Looking at the bond market, we've seen quiet activity there, and
so let me get to the issue of liquidity.
We expect this to.
Uzor, let me get to the issue of liquidity here, and we've seen these FAC inflows come in here. How do you think, is that going to do any much to stem this the challenge of liquidity, and what's your outlook for liquidity down the line?
Yeah, so going into next week, we note that there is an NTB auction. Though this is a rollover, we don't expect that to have much impact in the system liquidity. We have coupon maturity next week about 17 billion, and this may not have much impact because the market is currently in a repo of about 427 billion naira. However, the coming weeks we expect FAC to come in, so this would help the system liquidity come up to positive levels in the coming weeks. But going into the next week, we don't expect much improvement in the liquidity up until the FAC inflow comes in much later.
All right, let me get your thoughts on the newly listed savings bonds and the opportunity in there for investors.
So yeah, we've not seen so much appetite on in the bond market space, like I was explaining earlier, and we don't expect this to change in the near future. Most of the market participants are looking for much shorter instruments like the NTB, where we've seen a lot of activities on that space. As you know, there is an MPC meeting next week, Monday and Tuesday, and we expect that the decisions in that meeting would kind of spur activities in the market. As we on this end, we anticipate that the central bank would most likely maintain or increase rates, noting that the inflation figures that were just released did not grow significantly. So we might see the central bank trying to moderate the levels at which these rates are going up to stabilize the economy. However, this could either go in the line of either the rate going upwards or maintained at the current levels that it is.
All right, let's get to FPI activity and also what your outlook for FX inflow is.
Yeah, so we've seen a lot of FPIs coming into the market. See, the central bank has been working assiduously in on this space. We've seen them float a lot of OMO auctions in recent times, and these foreign portfolio investors continue to take advantage of these auctions to bring in FX. However, they always want to bring in FX at elevated levels, and considering that in recent times the FX rate has been trending upwards, we've seen this has been attractive level for these some of these FPIs to bring in their FX to convert to Naira to purchase some of these instruments. We expect this to continue we expect these FPIs to continue to come into the space in the near weeks. However, we've noted that CBN has also extended their focus not just to the FPI but also the IMTOs. During the course of the week, CBN released the notification that they have licensed some new IMTOs, and we expect that these IMTOs is going to help to channel more funds into the official space as we'll continue to see tractions in remittances to the Nigerian space. In the FX market, the market participants have been trading with a mixed sentiment. We've seen most of the demands not being lifted as due to the fact that the market participants would want market to trade at lower levels. However, the supply of funds it's trading at higher levels. We'll continue to experience this mismatch in demand and supply for a while now, and with the central bank coming into the market to participate in the market, we'll kind of seen some level of modulation in these rates as rates have started, the market has started appreciating, and we expect this to continue hopefully by the course of next week. And some of the decisions of the MPC may also spur more activities in this space.
Yeah, but when you look at the second quarter holistically, what's your assessment of this, and what can we expect down the line for the remaining part of the second quarter?
Yeah, we noted that the figures in the second quarter were not very impressive for FPIs, and we saw that our observation shows that there have been some outflows. However, we've started seeing some of them coming back in, and if you would note, the central bank is planning to float local bond. The federal government rather is planning to float local bond by June, as they earlier stated. If this happens, we might see them mopping up more of local dollar liquidity in the market, and this could support the central government in their various interventions or help the government to continue their projects, to continue to meet their FCY obligations. We've also noted that the government has been aggressively borrowing from international counterparties. So regardless of this, we have some positive outlook in terms of the FX flows for Nigeria. And if the fiscal side continues to support what the activities of the monetary policy it has been doing, we might see more flows in the market, and this would improve rates in the market.